Hi everyone, I'm Sally Eves and a very warm welcome to this series exploring financial inclusion and credit risk. And today I'm delighted to be joined by Adrian Dally, who's the Motor Finance Director at the Finance Leasing Association. A warm welcome to you, Adrian.
Good afternoon to you too.
Thank you. And I wonder if we could just set the scene by sharing a bit more with the audience exactly who the FLA is and what you're all about.
Well, the Finance and Leasing Association is the trade body for the UK finance and leasing sectors. So that covers the UK consumer finance, motor finance and asset finance sectors. And we are a trade body that has pretty much the whole industry in membership. So obviously we represent the sector, but we also provide a lot of services to our members and their customers in a public interest way, as the industry looks to us to coordinate things with the centre.
Absolutely. I think a key role there, both here in the UK and right across Europe, I would say too.
Indeed, that's right. Yes, the sector is very much connected across Europe and internationally, and we're conscious of the UK. The UK sector has a particular leading role in innovation in this space.
Absolutely. I think, again, at this moment, such a critical role when we look at some of the challenges that the UK and across the world, frankly, are facing, particularly around the cost of living crisis. I think probably the worst we've seen in living memory. Inflation is well up, fuel prices, energy prices are all very high as well. Also, there's continued worry around recession. So again, affordability, a huge issue for so many people across the world right now. What impact are you seeing there in terms of the effect on motor finance companies that the FLA is representing?
Well, as you say, we're very much conscious that things are about to change. At the moment, our members' customers are in a reasonably good position. There's very little change at the moment, but we're conscious that in this autumn in particular, things are going to change, and there will be customers on the industry's books who will be in distress in the autumn. So making sure the industry has the capacity and the capability to deal with those issues, as we've always tried to do in previous downturns, is critical for us.
Absolutely, yes. Some big changes happening in October in particular, certainly on the energy side. You're absolutely spot on. So when we look at this in more detail, fair access to motor finance, a key consideration, I would say. Why do you think this should be something at centre stage when we're talking about the basic cost of living and give more attention to this area?
Well, exactly. We certainly don't regard ourselves just as another commercial sector. Essentially, 7 million UK households use motor finance from one of our members. And to that extent, we regard ourselves as having a social and economic purpose for here, where the ability to access affordable motor credit enables 7 million households to have access to society, to get to school, to get to work, and to access society generally. And that's, to that extent, we're a critical part of the national infrastructure. So as society inevitably changes in the coming months, we need to make sure that we're still able to provide that social and economic purpose to the country.
Excellent points there, Adrian. Thank you so much. And I'd love to look at another aspect of this now. So regulation. How are you seeing the crisis driving changes in regulation from the FCA? And also, what about the role of the motor finance community more broadly here? How they're adapting to these changes in regulation?
Well, quite rightly, the Financial Conduct Authority, who are the UK regulator here, are placing a lot of emphasis on affordability going forward, but not just affordability in terms of whether we provide a loan to a consumer, but also what happens to that consumer in flight, as it were, as their own circumstances change. So the FCA is putting great store on affordability at the front of an agreement and affordability and forbearance during it. And that's a matter of great focus for us. So there are real challenges here for the industry in understanding where is a consumer at here, where are they now, which is an easier question to answer, but still not that easy, but easier than saying, well, where could they be in the coming months and years? And getting a handle on that is just as important.
And it brings us on to the financial inclusion report that was issued earlier this year, showing that at least 7.1 million people in the UK are lacking that suitable credit footprint. So they're really, negated from accessing basic, affordable financial services or credit. So I'd like to drill into that a little bit more detail. The COVID pandemic as well has accelerated levels of debt in many areas, and people's ability to service that debt as well. So if you put that in the round, now how are these factors impacting consumers that you're supporting at the moment, in terms of access to car financing, and how can we do more, from a financial finance company perspective to fairly access and assess these applications for car finance as well?
Well, this is a critical issue for us where we're conscious that when risk in our sector goes up, then in many respects, other things being equal, the rational response to that is to de-risk and reduce the size and the scope of what we do. But that, as I said earlier, runs up against our social and economic purpose here. So in other words, trying to square that circle and find ways of better understanding where individual consumers are at, having a fuller understanding where they are through traditional sources as well as non-traditional sources, through digital as well as human ways, is absolutely critical to ensure that consumers are included in the opportunities that are there, because the opposite is frightening. If the credit sector fundamentally de-risks and downsizes and sticks to what's safe, then you have millions more people in society not being able to access good, regulated, responsible credit that enables them to spread their costs over a longer period and enable them to do the things and acquire the things they need to do. So those things are not incompatible, but working out a new way to do it fit for the 21st century that harvests the best available information in the most innovative ways, absolutely critical going forward.
I couldn't agree more. And a slight analogy on my side as well, from the security regulation compliance perspective as well. Again, we're starting to see organisations, Lloyd's of London being an example of this, kind of predicting that in a few years' time, possibly about 2025, might no longer have ransomware protection because of some of the different challenges there that we're seeing. So we're seeing different sectors, different types of challenges. So that ability to have the right information to the right people and make sure no one's excluded from that type of protection or access that we're talking about here is a ripple effect in so many different markets at the moment. So I think what you're bringing to the fore there is absolutely critical. Adrian, thank you so much. I'd love to speak to you further as well and come back to this, and perhaps we can review in a few months' time the next steps and where we've got to in this journey. But thank you so much for all the support you're giving to people here and for shining a light really on financial inclusion and credit risk.
Thank you very much indeed.
My pleasure, thank you. And thank you all for watching us today. And we'll also be sharing some more information about the work of the Finance Leasing Association and access as well to the inclusion report that I mentioned. Thank you all for joining us.